Good news is I'm here to talk about bad or money. The bad news is I'm in between you and lunch, so I will try to make it right at 12 o'clock on the money. I work for a company called Florida First Capital Finance Corporation, and we do SBA loans, and then we also do the Florida Recycling Loan Program and administer that. We partnered with the state a couple years ago because of our infrastructure and our ease and ability to do this and run this program through them. But the Florida Recycling Program is essentially a program that is set up to help small businesses recycle, and that's as simple and as easy as it is. Unfortunately, it's not for working capital, it's not for small end trash cans or other things that make a big impact. It is for basically machinery that does recycling. So what you're looking for in this type of situation is you are looking for a piece of machinery that is going to recycle the material. So if you have a big, let's say you have $1 million facility, or actually, you know what, let's use Harvest as the example. So let's say Harvest right now is dealing with paper products, and they have a lot of recycled material, but don't have a way to process it into the desired material at the end. They would get a baler or whatever the piece of equipment would be to run and facilitate that. The equipment typically costs, let's say $100,000. We would end up financing that. Okay. The problem is 200 is our limit through the state of Florida. But essentially, the way that the program works is it's a 90% loan. So just to make the numbers easy, let's say you're borrowing $100,000. You would bring $10,000 to the table, and we would finance the other $90,000. If you are not a startup, if you've been in business for a long period of time, the rates are extremely attractive. They can be as low as 2 below prime. So if you are a startup and it's a riskier transaction for us, sometimes we're 2 over prime. But it's all credit based. But the goal is to get the money out to the people, obviously as cheap as humanly possible. And this is a good way to set this up. This typically works for companies with a tangible net worth under $15 million. Now, depending on what kind of companies you're looking at, obviously a Publix or someone like that would not fit into this, but if I do small business loans all day long, it's pretty rare to find tangible net worth over $15 million on a small business tax return. So, I mean, this could be companies with sales of $30 or $40 million. It's still going to qualify for this because we're going off of taxable tangible net worth. And after you add debt and depreciate other factors, it normally works. This is only for for-profit business. This is not for non-for-profit business. All of these are personally guaranteed by the individuals that own the company, or if they own at least 20% of it. Got to be a licensed in-state of Florida company as well for this program to work. And you need to be able to demonstrate that you have the ability to pay the loan back. So the goal is to get more recycling equipment into the community, and this is what DEP and the state of Florida have set up this program to do so. Any questions so far as we run through this? Are there any small business owners in here that are running this? What's the group makeup so I can make this entertain how this impacts you? What's everybody do? What do you guys do? Public Works? Nonprofit? Large retailer. Okay. Small business. You're the one we're talking to. So you're the one that this works for, or you can tell people about it. The best part of this program is the fact that it's extremely cheap money for doing a very, very specific type of equipment that it runs into. If it's used for recycling, odds are that it's going to be okay and it's going to fit into this. But these programs don't work without people knowing this information, so it's great to get out there. Yes, ma'am. That is exactly who we are trying to get this message out to. Yeah, sure. The question how does this work with municipalities that they're working with? So to answer your question, the small businesses as a municipality that you are partnering with, this is perfect for them. You obviously as a government entity can't borrow the money, but the people you work with can borrow the money. Okay, and now listen, it doesn't seem like a lot, but $200,000 isn't a big fix for most of these folks with what they're looking to do, and I'm going to address how we can work through that. But this is kind of how a typical deal works. This was done for Tropical Recycling in Palm Beach. They borrowed $220,000 was the total project. Because they're putting 10% down, we're going to loan them $200. The total project is $220. They refinanced an existing piece of equipment that was at 7 or 8%, and we got them, I think, like 3% or 2% on the equipment, which really helped them. Once again, this is all cost to get to market, and the ability for these folks to do this cheaper. It's business, so the cheaper you're going to make this for them to do it, the more likely they are actually going to do it. So that's why we've set this program up, and one of the best parts of it. The problem is, and this is Guy's contact information, who runs the program, who unfortunately wasn't able to be here with us today. But the problem is $220,000 is not going to cover most of the equipment that you're going to see in these bigger facilities that you're going to work with. And when that comes into case, we have the Small Business Administration that picks up the slack. So we have a program called the SBA 504 loan program, which is a public-private partnership between banks and the Small Business Administration, which can do $20 million projects. It can pretty much go to the moon with whatever you're going to see for a small business. So let's assume that you have a business in your community that is looking to buy $1 million piece of equipment. The way that it'll break down is pretty simple. You will have 50% that is with a bank. So let's pick your favorite bank. Let's just randomly pick one, Bank of America. Bank of America in this situation will finance 50% of the project, okay? So they take their funds, they do a conventional loan for 50%. What Florida First Capital does, and we're one of 7 certified development companies that do this in the state, we will finance 40% of the cost for the borrower. The borrower will bring in 10%, and that's how they'll come in with their cash injection roughly. And we'll finance closing costs, you name it, it goes into the deal, everything other than working capital. Now, there are situations in where a company is just starting out. I'm working with a borrower right now who's starting a brand new manufacturing facility. He's been in the industry for probably 25 years, and he sold his business 3 or 4 years ago and is looking to get back into it. So person is extremely wealthy and wants to get into this, but unfortunately the company that would guarantee the loan has now sold the property. So this is going to be what's called a startup facility. Okay, and in this situation, the loan structure changes roughly. It goes from what was normally a 50% the bank, 40% the SBA, and 10% the borrower. It switches to make it more advantageous for the bank and for the federal government to where the borrower is bringing more money to the table. So in this situation, the borrower now needs to bring 15% to the table, essentially a little bit more skin into the game.
John?
Yes, sir.
Does the state program, is it set up for startups?
It is set up for startups as well. The loan to value should still be, the question was, and I'm sorry, I keep on assuming it's all wired up. The question was, is the state program set up to do startups? And the answer to the question is yes. The state program is set up to do startup corporations. The only difference is going to be the credit and the rate. So we're going to look at someone's business plan and say, does this plan seem like, 1, they're going to be able to do the recycling goals that they need to do, and 2, are they going to be able to pay us back, which is a big proponent of it. So in most startup situations, there's always talk about banks aren't lending or governments aren't lending, or it's a little harder. Startups are always a hard situation to get into. The main difference that fixes most startup situations is cash. So a person that has more financial liquidity is going to make a transaction much easier to do if they don't. It's been this way since the beginning of time. The more money you have, the easier it is for you to borrow money. It doesn't help most small businesses and it frustrates most of them, but on a startup situation, you're going to want to see as much cash as humanly possible. So let's assume that they need the 10% to put down. You're going to want to see another 10% in liquidity to run the business that's a startup. But we do them, but the rate, we risk rate it. So we look at their ability to pay us back, and their interest rate is going to be based on that. And so that's kind of how we do set it up. But we do startups, absolutely. There are situations where the equipment or the facility that we're going to use is what's considered special purpose, where at a certain facility, what you're doing is going to be only done for one thing. An example of this is a bowling alley, a hotel. At certain types of facilities, you're doing a different loan to value on an SBA 504 loan. To where if it's a startup hotel, you're doing 80% loan to value and the customer's bringing 20% to the table. And that's the main change. One of the differences that we've now seen the SBA do, they now have this green initiative. And I'm a little bit off my slides because they're a little bit boring and this is going to be a little bit different. One of the things the SBA has done working with what most states are trying to do and what most people are trying to do is get more green energy in. And so the SBA has a program to where they normally have a $5 million limit on whatever they can do for one borrower. They have a new program, which is called the Green Initiative, which allows them to loan up to $5.5 million per project based on a green initiative. And what that is you either need to reduce your current consumption. So let's say we're operating in this building right here, and we're moving across the street to a new building. We would take the energy we used in this building in the new facility. If we save 20% by putting solar panels, by having better windows, better AC units, better heating, if we could save 20% in costs, we're eligible for more small business administration money, which is very helpful, especially if you're doing multiple projects. You can also qualify by getting at least 10% of your business or your energy from renewable sources. So I am working with a customer right now who's building a $20 million manufacturing facility. He is going to do one right now and probably do 6 more over the next 6 years. He just got a bid, and it's super expensive. He just got a bid to put solar panels on the parking lot and the whole roof, and it's probably going to cost him about $4 or $5 million. He is going to get about 70% of his energy from renewable sources based on that. But the good news for him is now he has more small business money available to him because it's per project. And our rates are fantastic. My 20-year fixed rate money is right at 4.59 fixed for 20 years, which when you look at residential, that number doesn't seem very good, but in a commercial setting, that's about as cheap as money you're gonna find there. Most people don't do 20-year fixed rate money on commercial. But that's one of the main things the Small Business Administration is doing to help. It also, you see it on hotels where they do multiple properties. They do one this year, one the next year, and normally the most they would be able to borrow is $5 million total for the life of their time. But because of the green project, using renewable energy, they can use $5 million per project. And that's a big driving force in more renewable energy. Just because of the lower rates and their ability to finance more money with the SBA. All of our rates are below market, well below market. With the recycling program, you're looking typically at 3%, sometimes as low as 2%. If it's a riskier credit, you're looking at 4 or 5%. And then the SBA market, we're doing straight 10-year loans, which are at 4.25%, and then you can do 20-year fixed rate money at 4.59. One of the requirements we do with our partners, say Bank of America, Chase, Wells Fargo, whoever we're partnering with on those loans, we make their term be at least 10 years, which is very helpful for the borrower, especially on this type of equipment. When you're buying recycling equipment, most people want to do it on 3 years, 4 years, 5 years. We're going to make, let's assume we're going to do a 10-year loan for the person buying the equipment. We're going to make the bank do a 5-year loan. So instead of him saying, hey, listen, we don't like the equipment, we're going to do a 3-year loan, by partnering with us, we are going to make sure that they at least do a 5-year loan, because this equipment is extremely intensive and extremely expensive, and the longer you can amortize it out, the more it's going to help the small business and the likelihood that they're going to benefit from it. So SBA requirements are very similar to the Florida recycling program requirements, and they pretty much were built on our current credit box. So you're looking at for-profit businesses in the state of Florida, tangible net worth of under $15 million. Their net income tax over the last 2 years, average needs to be under $5 million. So if they made $10 million this year, but lost $2 million last year, they would qualify. But you don't see that many types of businesses typically in the realm that we play with, or that you're seeing this type of recycling done. And for manufacturers, we need to have under 500 employees. We do not do working capital, we do not do inventory, we do not do goodwill, we do not do franchise fees. That's the same for the SBA 504 program as it is for the recycling program. One of the things that your borrowers in the counties that you're going to deal with, or people that will come to you and talk to this, will see this type of equipment is hard to finance. When you buy a piece of equipment from Caterpillar, Caterpillar normally provides financing for you. This type of equipment that they're buying and recycling, the manufacturers might not have financing in place for them. So this is going to be really important to pass this information on to them, just so they can have it. This is Coastal Recycling Services, which was a large deal that we did in Jacksonville, Florida. The total project was $11 million, and we bought the land, constructed the facilities, put solar panels on the roof, and then also basically set up the infrastructure for the recycling facility. If you'll notice the way the plan is designed in the picture, and the picture's a little small based on how far everyone is back there, but you'll notice how it's set up to run the facility extremely efficiently. So they're pulling in, they're dropping off, it's running through the recycling equipment and then exiting out through the plants. One of the problems with the older facilities that you'll typically see is they're growing on top of each other, so it's not very efficient. They're wasting man hours, they're wasting energy, and the process doesn't work well. By doing a new facility, such as the Coastal Recycling Services facility, they were able to set everything up in a specific process, which not only made it faster so they could handle more recycling materials, but also takes less energy, less use, less moving the dump trucks around to get everything through the process, and is just more efficient. They also have solar panels on the roof, which is one of our favorite things to do. It's definitely an allowable expense for the SBA, and you know, I don't remember the exact amount of energy that this took, but I believe it was about 20 or 30% that they got in solar. There's a lot of land on this as well, so if they had the budget to do it, they could have probably got 100% of their energy from solar. And I see a lot of businesses, not even recycling, going to more of the solar plan model just because you get to control your expenses. This is actually one of the largest recycling loans approved by the SBA. And there's my contact information. I kind of jumped around a little bit just because of the format and the people here. Some of this is beneficial to you, some of this you don't need to know, some of it is just, hey, call these folks for a recycling loan. The main things that we want to hit home and make sure everyone's aware of, this is just for the equipment. This isn't for working capital for a recycling company. This isn't for marketing for recycling. This is very, very specific to equipment financing for them, and it needs to be recycling equipment. How it normally works is we run the equipment through the DEP, make sure it's something they're on board with, and we kind of move through that. Any questions? I promise I'll repeat it so it gets on the record and I'll stay out of trouble. The question was, is there any restrictions on the type of material that is being recycled? And my answer is, I do not believe so. Now, if they are recycling nuclear material or something that that there might be more laws and regulations than I'm equipped to deal with, I don't know, but my odds are yes, we want things to be recycled. If you are taking material of any kind that would normally be waste and you're running it through a machine that is recycling it, my understanding of the program is that it's allowable. And the reason this program exists is because other people might not do that loan. So the goal is, now, are our underwriters excited about that type of material on a property or no? But it needs to be done because otherwise it wouldn't be. So my understanding is that it would be eligible and that we would be fine doing it. Any other questions? Yes, sir.
What if, for the sake of argument, the machinery or technology doesn't exist yet? Would that be a eligible purpose for this loan, like to create?
So the question was, is there funding available for machinery, recycling machinery that does not exist yet? And so the answer to the question is no. So this is specifically, this microphone is here, and while it's not eligible, we're just gonna assume this is a piece of machinery. It is built and we can use it. So you're looking for R&D and development, which is honestly where a lot of this money should go. This just isn't where it is. So my advice to you is, as an entrepreneur who's looking for financing, there is a loan that is called an SBA 7A loan. And they do those loans for working capital. So Wells Fargo, Chase Bank, Bank of America, SunTrust, all do them. They'll look at personal assets, they'll look at the business plan, depending on how much you want to borrow. Sometimes they just credit score it for what they're looking to do, but that is probably the best option for what you're looking to do with research and development. And my advice as a lender, if one of the folks I've listed with, or the people you're banking with, or your friends are banking with, or someone else, go to someone you have a relationship with. Because if you have money there and a track record, it's going to be easier for them to say yes.
You may not know the answer to this because you're part of the financing, but on Florida Coastal's website, it says that they've suspended their operations until further notice.
The question is, Florida Coastal's website is showing that it is no longer active. I have no idea. If maybe they needed money from me and they didn't get it. So that's the only question that I could possibly come up with. Unfortunately, I don't know the answer to that. Any more questions? All right. And done before lunch. Perfect. The goal.